Yesterday marked 2 years since President Trump signed the Tax Cuts and Jobs Act. For a look at how those tax cuts have impacted the markets, I want to bring in Art Laffer, Laffer Associates founder and chairman, and also co-author of Trumponomics, Inside the America First plan to revive our economy. Laffer served as an economic advisor during President Trump's campaign and, of course, is known as an architect of the president's economic platform and the Laffer curve. Mr. Laffer, good morning. It's nice to see you.
How are you this morning? What a lovely day.
What a lovely day. So we're 2 years after the tax cuts. We showed a screen right before we came into this, before we went to break, that showed that the markets were up. Did you see the number?
No.
Were you looking?
I didn't see the number.
In 2 years?
No. This is markets rise since the Trump tax cuts. Dow up 15%, S&P 20%, NASDAQ 28%. And my question to you is what you think the natural natural increase would have been without the tax cuts.
Well, I think it would have been a lot less, to be honest with you. I think one of the major things this tax cut did was increase the stock market and the wealth of America. I think that's huge. I think the GDP growth has also been quite substantial from the tax cuts. Tax revenues, I think, are fine, running right in line. I think employment has been improved dramatically, and I think real wages have been increased substantially from the tax bill. So I'm very pleased with the results, and I look forward to a lot longer increases in prosperity from that tax bill.
So to the extent that there are folks who say, look, some of this just pulled forward effectively, or was a one-time gain,
Sure.
Do you think that's not real?
No, I don't think it's real. I mean, what these people miss, by the way, on their tax revenues, which bothers me a lot, is there was a one-time fourth quarter 2017 imputation of $250 billion in taxes from assets held abroad, from earnings held abroad. $250 billion, they all start their analysis on January 1st, 2018, but that's wrong. It really should be started in the fourth quarter of 2017, and if you look at that, tax revenues are doing very well in the last 2 years relative to the prior 2 years. And if you look at GDP growth, we have come down some on GDP growth. Very, very true. But when you look at us relative to the rest of the world, we've skyrocketed relative to the rest of the world. We're ahead of, if we'd have grown at the Eurozone growth rate, which we were a little bit below before, we would be 2.5 percentage points lower in GDP today than we are, 1.25 points a year ago. So that's about $700+ billion additional GDP I attribute primarily to the tax bill.
Art, someone who's a proponent of lower taxes, as I am, what's your thought on using the tool of tariffs in approaching China and how we've dealt with trade with other countries?
You know, that's a strategy question that I'm really not an expert on. I'm not a good negotiator, but it is a traditional tool that has been used from our founding fathers on. You know, trade is a very intricate, complicated, probably the most sophisticated area of economics. And tariffs and quotas have been used extensively to get countries to behave differently, and we do it against North Korea, we do it against Zimbabwe, Iran, all sorts of things. I'm a free trader, quote unquote, in almost all aspects, but using these for negotiations is a very legitimate way of negotiating with other countries.
Art, of course,
but I'm no expert on how to do it.
Of course, the corporate tax cuts help the economy. It's axiomatic that if you have uncompetitive rates and you go to having competitive rates,
yes,
it's going to be good for this country. Why is it on the personal tax side that the president and the Republican Congress has not gotten credit for lowering personal taxes?
Well, because they were overshadowed by the corporate. Very simply, we cut the corporate from 35 to 21. We went to territoriality on our tax stuff. We did all sorts of other corporate ones, 100% expensing, and all of that was really huge and really important and very needed. The individual was from 39.6 to 37, and we had a couple of pass-throughs as well, which were very injudiciously used politically. But, you know, it just was overshadowed. I think then when the president's reelected, he'll go to a much lower personal income tax rate and really reform the system.
Art, it depends on where you live for the personal income taxes, too. In blue states,
yes,
those on the coast, a lot of those people are paying higher income taxes because of the change in the SALT deductions.
They sure are. Yeah, but we're paying less. I mean, here I am in a zero income tax state with no earned or unearned income, and here I'm having to subsidize New York because they decide that they can pay Cuomo $100 and get a tax credit of $40.
I know, but if you go back to the other side of that argument, I've listened to this debate a million times over the last 2 years. If you go to the other side of the argument, it's that, okay, states, some of those red states are actually taking money from the federal government versus some of the blue states that are giving money to the federal treasury.
Yeah, the government has never been meant to be balanced dollar for dollar by state. That's never has, or dollar to dollar by income class or by any other group. The federal government spends its money in its best ways possible and collects its money in the most efficient way possible. And sometimes that leads to imbalances, but it shouldn't lead to imbalances on tax rates paid by equivalent conditioned people in different states. It just shouldn't. Okay. There should be no deductions for federal, state and local taxes.
Let me ask you a question. One of the goals of the tax, at least the corporate side of this tax plan, was to get corporations to repatriate, to bring cash back to the United States. And I want to ask you about this. The president specifically had pledged that companies would bring back $4 trillion. That was the number to beat. You look at the numbers thus far, and they have fallen short.
They may well have fallen short. I haven't followed those numbers carefully, and I don't remember exactly what the president said. But what I do know is the taxes collected on those foreign earnings held abroad was $250 billion collected taxes on those foreign earnings, and that's the revenue part.
Just to put it in context, for the full year of 2018, $664 billion had been brought back. When I say falling short,
But can I just ask a question? With all due respect,
that's a very large.
Who cares? Why does that matter?
I mean, the tax revenue.
Why does that? I don't understand why.
I don't care.
I don't understand why. When you lower corporate tax rates, somehow that's a sop to billionaires, and if you don't have this exact amount of money coming back to the U.S. as was otherwise predicted, that's an issue.
No, because
we now have competitive tax rates,
and
our economy is doing great.
And that's a great thing. The question is it doing all it's supposed to do? And I'll tell you why. Because what you would have done, if you really cared about repatriating cash back, you would have come up with some kind of additional strategy that would have done something, either forced the money in certain ways or would have been at a different rate. I mean, there are things you would have done around that if that was the issue.
And now, if you're saying it's not the issue, I think that would have been a mistake. I don't want the government to force, company CEOs exactly how they're going to.
Or then just don't say that I'm doing this for this reason.
Art,
let me balance your arguments out. The huge trade deficit increases our capital flowing into this country. That's where you want it, is the real capital that provides jobs, output, employment. That trade deficit is the capital surplus, which is an enormous move of real resources into the United States to provide employment. What has happened with regard to the earnings abroad, we've collected the taxes on them. What more do you want? If they want to sit overseas after paying their taxes fair and square, God bless them. But the real benefit has been the trade deficit, bringing real capital back to the U.S. to provide jobs.
We got to run. Wonderful. We want to wish you a very happy holidays and always appreciate your time and perspective.
Thank you very much, and thanks for allowing me to be on it, especially on this day. Thank you.
See you in 2020.